It's been 20 years since the Asian financial crisis, and former PM Mahathir Mohamad still sneers at currency traders. The 91-year-old told Bloomberg currency trading should not be a business at all, and that he sees no point in treating a currency like a commodity, devaluing it artificially and causing poverty in poor countries. In 1997, the local stock market crashed. The ringgit plunged 35% and reserved strength. But instead of turning to the IMF and the World Bank, the government set up a National Economic Action Council, cut interest rates and pegged the ringgit to the US dollar. Zati Akhtar Aziz, Bank Negara's chief economist at the time, told Bloomberg the pressure was immense and tensions were high. But the central bank managed to overcome such moments from knowing the devastation that could result and the consequences that it would have. In the end, the approach worked. Malaysia's economy, which shrank 7.4% in 1998, rebounded to grow 6.1% in 1999. It was also spared from IMF's austerity measures. Taxi drivers haven't been very happy with e-hailing services, but it seems it's not all roses for Uber and Grab drivers either. According to a survey by the DAP research team, more than half of e-hailing service drivers say they are earning less than a year before, and most of them are unhappy with the commission rates. DAP lawmakers Ong Kian Ming and Liu Chin-tong say 75% of those surveyed are of the view that the 20% to 25% rate charged by the e-hailing firms is unfair. In fact, more than 60% of drivers want the government to regulate the amount of commission which these companies can charge. According to the survey, full-time drivers made on average about 3,200 ringgit a month, up to 1,000 of which goes to maintenance. Among others, Ong and Liu suggest that SPAT ensure a level playing field between the taxi drivers and e-hailing drivers in terms of fares and wages. They also say that a tribunal should be set up to hear the appeals of e-hailing drivers who feel they have been unfairly banned or suspended by Uber or Grab. Transport Minister Liow says Malaysian firms should act fast to grab space in the growing logistics hub of Kuala Lumpur International Airport, or else bear the risk of being left out. He says it has directed Malaysia Airports Holdings to prioritise local companies who need the space, but wants the locals to grab opportunities faster. Liow highlights that Alibaba chief Jack Ma alone has taken up a lot of space, referring to the Digital Free Trade Zone. The DFTZ is a joint venture between Malaysian Digital Economy Corp and Alibaba Corp to develop some 110 acres in the old low-cost carrier terminal. Liow had been talking to reporters at the launch of logistics company Tasco's Global Parts Distribution Centre for Renesas Electronics Corp. And Tasco Executive Chairman Lee Chek-po concurs that there is a need for more space given competition coming from China, explaining that Tasco is already in talks with MAHB to secure a bigger space. Bank Mandiri, the largest banking group by assets in Indonesia, expects to start operations at its Malaysian branch at the end of this year. Its President Director and Chief Kartika Virjo Atmojo says the exact date of commencement will depend on an audit conducted by Bank Negara in the next few months. Bank Mandiri's entry makes it the first full banking player from Indonesia here. The capital requirement to start its Malaysian operations is 300 million ringgit, which the bank will be injecting in stages, starting with an initial 50 million. The branch will start off by targeting corporate customers. Mercedes-Benz Malaysia recorded its best ever monthly sales in June with 1,210 units sold. This brings its total for the first half of the year to 5,913 vehicles. Its President and Chief Klaus Wagner and Sales and Marketing VP Mark Rain say that the car manufacturer was on track for another record year. Wagner said the positive growth was a clear indication of customers' trust in the Mercedes-Benz brand, while Rain said that its very successful first half of the year helped the company extend its lead in the premium segment. Adding that with the good momentum of second quarter and its locally produced products, it is on track for yet another record year in 2017.